Welcome, everyone. Welcome to this episode. It's a very interesting topic today we are going to be discussing. Of course, it's about the fund, but the interesting part of it is around innovation. I have with me, of course, Mr. Amit Sinha from HDFC AMC Limited with over 19 of years of experience, of which 16 years he has spent in equity research and fund management roles. He joined HDFC Asset Management in 2020 after Macquarie Capital Securities, where he worked for over 10 years, and he was a senior equity analyst in consumer sector for India. Of course, he's done his MBA in finance and marketing from XLRI Jamshedpur in 2008, and is, of course, an IIT Roorkee product, mechanical engineering from 2003. Let's get to the meat of the topic. And let's, when I say meat of the topic, let's start from the basics first. What is innovation in your view?
Thank you, Vishu, for the kind introduction. So, basically the way in which we look at innovation is to introduce a product or a service which is there to solve a problem, either existing or completely kind of changing the market paradigm. And more importantly, wanted to kind of delve into this with some examples. Innovation as we define it, it is of three broad categories. One is product innovation, and within product innovation, you have innovation categories like radical innovation, which completely changes the market dynamics. It doesn't have any pre-existing market. But when these kind of products come in, they create their own market. And some of the examples for example, the Google search engine. There was no search engine before that. And similarly, let's say an Airbnb in the hospitality space, or any new pharma drug, basically for a disease which was incurable before that. In the disruptive innovation, which is another kind of product innovation, you have examples like iPhone, which was not the first mobile phone, but it kind of merged internet with a mobile phone and kind of completely disrupted the incumbents and took market share away from everybody else. Similarly, you have other examples in disruptive innovation like Uber, etc., which completely disrupted the taxi market across the world. If you look at the other kind of innovation is basically a process innovation where the processes are changed to kind of get cost or quality advantages. And here some of the examples are lean manufacturing in Japan, which was used in the auto industry to come out with cars which were very efficient during a time of fuel crisis. We have all heard of concepts like Kaizen, etc. They were all used started with Japan, and they kind of completely changed the dynamics of auto manufacturing. The same product, but with different process to gain cost and quality advantages. Similarly, something like a fintech insurance company, they have used a different process to onboard, kind of clients through the help of tech. On the last kind of innovation, which we are defining is basically the business model innovation. Here, the companies, they change the business models itself, whether it is the revenue model or the cost model, and they come out with a business model, which kind of again, disrupts the industry. Here, I think, some of the examples which I would like to highlight are the fintech brokers. They started charging the brokerages in a completely different way on a per trade basis compared to and also used a lot of technology to kind of gain market share. Similarly, IKEA in furniture, retailing is a business model innovation. Again, there are other examples like Netflix, Spotify, etc. So it's a very interesting space, and I think more important to highlight that innovation is integral to economic prosperity of a country, and is very, very important from a company point of view also, to either kind of gain market share or to kind of protect their market share. So, I just wanted to kind of quote some of these examples so that we are on the right, the perspective of innovation is very clear. Uh, I'll stop here.
Absolutely, absolutely. So as I understood, we have product, we have disruptive, and then the business model innovations that we are looking at. Let's get a little India specific. Where do you see innovation in India? Where is it coming from? What are the pillars of innovation in India?
Yeah. So I think, very pertinent question. I would say that, it is ultimately the fund endeavors to, kind of the portfolio is all of Indian companies, and hence the context of, innovation in India becomes very important. If you look at India's standing in terms of the global innovation index, our ranking has improved dramatically in the last 10 years. From 81st rank in 2015, we are now ranked at 39th, and it's from a larger country perspective, we have improved the most. And that is happening, the ecosystem is improving on account of various, kind of things which have happened in the economy. One is very clearly the jam trinity, as we call it. Around 2015-16, the availability of smartphones and the cheaper data, and combine that with the digital public infrastructure, which was kind of government was instrumental in kind of creating some of this infrastructure like UPI. The Aadhaar was one of the key things, which was like kind of a unique ID for each of the citizens in the country. So I think all of this tech stack, whether it is digital tech stack or some of the availability of technology at a cheaper price points helped the ecosystem to kind of thrive post 2015-16, and a lot of kind of improvement in the ecosystem has happened after that. So that is one. I think one of the talking about pillars, if you look at the talent pool in India, 20 years back, we used to talk about brain drain. Things have changed after that. We are, not only from an economic standing point of view, India stands very tall at this point of time, fourth largest economy in the world, crossing $4 trillion of GDP, and also, from a risk reward perspective, the funding ecosystem in India is now thriving. Some of the entrepreneurs who kind of ventured, they have been rewarded handsomely, and all of this creates an ecosystem which is kind of rewarding in the platform. Lastly, I would say that, even from a salary, adjusted for purchasing power parity, the our salaries, that is the Indian salaries, are now very comparable to US salaries, obviously adjusted to the purchasing power parity, which is also leading to, kind of a phenomena, or what we expect in the next couple of decades. I think there will be a reverse brain drain, where, it will be easier to retain the talent, which is, to me, is the most important thing. And given the geopolitical, kind of a geopolitical kind of scenario across the world, I think we will have a better pool of talent getting retained in the country. Lastly, I would say that, government has been pivotal and is very supportive of the overall ecosystem. Many kind of initiatives by the government, has helped, and they are kind of very much aware of the fact that, if India has to get into the league of developed nation, at the way in which the government has defined it, we are into Amrit Kal, and if we want to become a Viksit Bharat, we need to innovate. Otherwise, and we have a very kind of a beautiful table in the presentation, if you get a chance to look at it, wherein we have given a country by country detail of how the country grew and what were the key technologies. And during that period, the GDP growth kind of accelerated because of the innovation, those areas which the country kind of pioneered. I think innovation is critical. Government knows about it, and we have couple of decades ahead of us, which I believe is will be very exciting before India becomes a developed country. Let's fingers crossed by 2047. Thank you. I mean, this is what I wanted to kind of say on this question.
Absolutely, absolutely, sir. Sir, you gave some very beautiful examples already, but can we delve a little deeper into the kind of investment strategies that different sectors have been seeing, and some examples of these investment strategies?
Yeah. So basically, some of the sectors example, again, if you look at, what the very some of the sectors, like starting with, let's say, autos. Again, in autos, EVs have been growing at a significant, pace higher compared to, let's say, the traditional autos. And this is happening across the world. Even in India, the growth in EVs, not only in four-wheelers but also in two-wheelers, has been disproportionate and is taking away the market share from the traditional kind of ICE led ecosystem overall. But I think that is only one part of, within a sector. It's not only the disruptive technologies which are happening, but the incremental innovation is also happening in terms of additional features like ADAS and other safety features, which are kind of helping a particular or manufacturers to come up with better design and better featured cars within a particular sector. So that is in autos. Similarly, if you look at other examples, like in electronic manufacturing in India, we have till now, if you look at the overall value addition in an electronic manufacturing is close to around 17%. It's a large sector. India, it's in the top two of Indian imports already, and we import more than $100 billion of electronics every year. So it is imperative for us to have a thriving electronic manufacturing system in the country. And now from the current levels, what will take us higher in terms of the value addition is the manufacturing of components within India, and I think there are multiple players who are striving for that. And ultimately, we have to get into the design, kind of capabilities. And I think we are on the right track. Here, we already know for sure that in the Apple's manufacturing ecosystem, we have already crossed 20% in terms of the value addition. Other countries like China, they are at 35%. Vietnam is at 25%. So we are making some very good progress in EMS space, which is again at the center stage of innovation globally. Lastly, I would say that a very homegrown sector like defense, the kind of R&D spends which we have put in defense. DRDO alone spends around 25,000 crore of annual R&D spends. If you couple this with the company's R&D spends, the defense companies R&D spends, India spend, kind of total defense R&D expenditure is more than 50,000 crore now. So which is a pretty big number, and a very number which has been kind of sustained over a period of time. And because of this, we are able to kind of come up with our own indigenous platforms, which are not only cost effective, but are also suitable for our, kind of usage, as in the terrain where we operate. Some of the platforms like, one of the examples which we have given in the presentation is the light combat helicopter, etc. So which are not only cheaper, but they are more suitable compared to some of the imported platforms which we used to take earlier. So we are kind of progressing across multiple sectors, and these are the three sectors which come to my mind as the top three.
Absolutely. Sir, let's get to the HDFC Innovation Fund in particular. Can you give us some highlights of the investment strategy there?
Yeah, so I think the endeavor is to create a pure play innovation portfolio where the lens which we are using is the central lens is very clearly innovation. And what we have done is that we have followed a particular methodology wherein we have when I say we, it is the entire research team of HDFC AMC. We have created uh, kind of a scoring system. Or basically we have scored all the companies and on a score rating of 1 to 5, where 5 is the best and 1 is the lowest. And what we found out is that above the critical, basically above the cutoff rating or score of 3, there are 235 companies in the eligible universe. So we are keeping 3 as the cutoff score. And we came out with almost close to around 235 companies which are into this universe. And these 235 companies are spread across multiple sectors, but important to highlight that the top 5 are across pharma, industrials, which includes defense. Then you have consumer discretionary, which includes autos. These are all AMFI classification sectors. So, consumer discretionary, which includes auto and auto ancillaries, and e-commerce. Again, that is a large part. And then we have IT, kind of space overall, and then we have specialty chemicals under commodities. So these are, the top 4, 5 sectors which come as the top contributors to the overall eligible universe, which we have kind of created based on the rating of these companies. And from a market cap perspective, again, from a number of companies in these 235, companies, the close to around 55 percent of the companies, 55 to 60% of the companies are actually in the small cap. This is not by market cap. Actually, in terms of the market cap, it can be very different. But in terms of numbers, pure numbers, 55 to 60% is small cap. Around 24% is mid cap, and around 20% is large cap. So this is the classification which we have given. We are going by a method, and basically we have defined the universe. So yeah, that is the way in which we are kind of looking to construct the portfolio here.
Absolutely, sir. Can you tell us something about the eligibility criteria that you have applied for the universe that will form part of HDFC Innovation Fund?
Yeah, so again, Vishu, actually, the criteria is different across different sectors, as you are aware of. I mean, so for example, while in pharma companies, I mean, let's say one of the criteria is to look at the R&D spends. But again, in R&D spends also, the R&D spends are divided into two categories. One is the normal run-of-the-mill generics led R&D spends, and the second is the innovative drug led or related R&D spends. So we have kind of focused more on the innovative side, and the companies who are spending more on the innovative side. It's difficult to put a particular number because these numbers are not kind of the classification of R&D spends only on the innovative drug is not known for of all the companies. But we have sector experts and who are kind of who know the companies in basically in length and breadth. So basically we have relied on them within the company and so that is one example. So second is, let's say, e-commerce company where the R&D spends can be zero, but the business model itself is completely different. So it's very difficult to kind of again set a parameter there, but to kind of go by the fact that they are coming up with a business model which are completely disruptive. Similarly, in auto and auto ancillary, there are many companies which are getting the innovation, kind of they're having access of innovation from their parents. They are the MNC subsidiaries, listed in India, and hence the parents are doing a lot of R&D, and hence, the subsidiaries listed in India, they are getting the access of, some of these innovative products or R&D or, features, etc. So, it is case by case basis, can't kind of pinpoint on one particular criteria. But we have been very kind of, again, methodical here in terms of kind of rating the companies. Lastly, I would say that, let's say, one of the thing which came out in the portfolio, and, that financials here are very low in terms of our, kind of portfolio, because we have not rated the large banks, again, the most of them, basically broadly, the large banks are not part of the universe. So again, goes to say the fact that some of these processes which you have used are stringent, and the endeavor is to create a pure play on innovation companies, which are using the innovation lens. And the implication is that these companies are inevitably growing at a higher pace. The growth of the portfolio is definitely higher compared to or not portfolio. I mean, I should say the eligible universe is higher compared to NSE 500 growth, both in terms of the revenue growth as well as in terms of the profitability growth.
Absolutely. While we discussed quite a few sectors already, so we have got some hints along the way, but to kind of sum it up, could you tell us which sectors can we expect to predominantly see in this fund?
Yeah, so I think, in terms of the sectors, as highlighted earlier, I think the leading sectors will be consumer discretionary, which includes auto ancillary, and e-commerce. Basically the new age tech companies. Then IT will be one of the key sectors. Then pharma and healthcare will be one of the key sectors, and then industrials, which includes defense, that will be one of the key sectors. These, and lastly, I would say that in the specialty chemicals also will be probably the fifth one. So these are the five large sectors which are, let's say, which will contribute more than 65, more than 2/3 of the portfolio. And then you have rest of the sectors. There is innovation happening across other sectors also, while we will be let's say under it is not a portfolio which will hug the benchmark, but at the same time, the basically innovation is there in across the sector. So even if financials is underweight, there are a lot of fintech companies, a lot of fintech insurance portfolio platform companies which are there, which will be eligible again from a portfolio point of view. So rest of the portfolio will be across the sectors. Proper, it will be a diversified approach which will be taking, and a flexi cap, kind of an approach which will be taking to construct the portfolio.
Absolutely. Sounds very broad based. Very interesting, sir. And finally, before we leave, any final concluding parting thoughts from your side, if we can have for our audience out there?
So the final thoughts, I would say that, I'll summarize by saying that, look, we are here gunning for a portfolio which is future ready, and companies which are future ready, where, the investments have already happened, or there is a thought process of investing into technologies which are relevant. And, more importantly, they are economically viable and will be taking market share from the incumbents. So I think from that perspective, while innovation looks like a niche kind of a portfolio, but it is, if you look at the other countries, they are the mainstay, and some of the larger companies which contribute, the top 10 of any large index globally. They were the innovators of the last decade, or 2 decades back. So you are investing in the future. You are investing in the companies which are likely to gain market share. You are investing in the companies which have management, and basically the technology, or the overall capability or infrastructure to kind of reinvent themselves, or kind of invest into technology, multiple things or products or services which can kind of not only gain market share, but also deliver higher earnings growth over a period of time. So it's a growth portfolio, and one should come in with the medium to longer term kind of a view. It's a thematic fund for sure, but we will as I kind of highlighted earlier, it will be diversified, and will use a flexi cap approach. So these are the final thoughts which I would like to mention.
Absolutely. So, absolutely. I mean, innovation is the change that unlocks new value. And on that note, thank you so much for your time and sharing your insights on this fund. Thank you so much, everyone, for watching. We'll be back with such more episodes soon. Thanks again, everyone.
Thank you, Vishu. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Please note that mutual fund investments are subject to market risks. Read all scheme-related documents carefully.